What's up, fuckers? Welcome back to another video. This video is going to be about back testing and learning more about the markets. Also, it's just a video for me, not you guys, just to kind of keep me on my day streak or whatever, or just to keep me updated, just so I don't forget to do this. So we're going to go over my strategy. I have to refine this like quite a lot. But this is my current strategy. We have, have a daily bias on the market. So what does that consist of? That means you obviously you wake up early. My bad. This should be the first thing. You wake up early, right? You read the news. News is a huge thing in the market. You can either read the news. You can go on CNN, CNBC. There's a bunch of websites that you can see the news, pre-market news, after market news. There's a bunch of news to see. There's also earnings that you can go on websites to see. There's a lot. So yeah, watch the news, analyze other price action. There's also technical analysis that you do. So obviously there's technical analysis that involves the charts, right? Your price action, the market structure, liquidity, fair value gaps, all that type of stuff. And then you have your fundamental analysis. So this is what I look every time. I look at the news. The news consists of the FOMC, CPI, PPI, NFP. And today was actually ISM, right? So that was our news. We can even add it in ISM, right? So there's a bunch of news to look out for, and then obviously on Forex Factory you can go to detail. You can say, okay, the usual effects, right? If it's good for currency, blah blah blah. Why do traders care? And then notes, right? And then when does it come out? The actual forecast, all that stuff. So it gives you all the details there. So you can do your own research. And then you have sentimental analysis. This is super important. This is the bigger picture of the markets, right? So obviously if you look at the daily time frame, like you might think, oh, we're actually like super bearish right now. Well, actually maybe on the 3 months we're actually like maybe super fucking bullish, and right now you're just looking at the day that's bearish, but on the 3 months we're bullish. So that's a sentimental. You really have to look at the big picture. Whoops. Big picture, bullish and bearish pressure from the pairs, and where's the market heading long term. Long term is also a key term, right? You don't always want to trade short term. I currently have positions in the long run, because I'm looking at sentiment analysis. So after you look at your analysis, I have said mark out session highs, and I'm trading the New York. My bad. I'm trading the New York sessions. So it would be from open would be 12 a.m. And close would be 4:30. Now the 12 a.m. is a New York open, but it's not the official open. 9:30 is the official open, and then the official close is 4:30. Mark out session highs and lows pre-market. Areas of liquidity, right? Both sides, buy side and sell side. And then what you want to do is you want to wait until 9:30, right? Wall Street bell fucking rings, market opens, all the orders get filled. Now this is a super important time. This is why you want to be in the charts. The moment the moment the bell rings is because at 9:30, when all the orders get filled in, you can see, and I'll show you this in an example later on. You can see which side the price wants to take out, either buy side or either buy side or sell side. From there, wait for price to my bad. From there, wait for your side to be taken out. So let's say we're targeting sell side, so it goes down, gets taken out, all the orders. So now you know, okay, with your daily bias in mind, obviously if our daily bias was bearish, that's a good thing, right? That would be bearish. The only problem is, now that I'm realizing, if we're doing sell side and our daily bias is bearish, the problem is, unfortunately, if we're hitting sell side, we want to take calls, right? Because it's going to come back up. So we could play it two ways. We could either play it so it comes down, hits sell side, market structure shift up, wait for a fair value gap, comes back down to this fair value gap, and then comes back up. But if we're bearish, we're going to take puts. Yeah, so look for a market structure shift or break a structure. I prefer market structure shift. This is more of a, I think it's the same thing. I'm not gonna lie. Just people, market structure shift is when you have or a type of liquidity that's taken out and the market changes direction. That's what it is. With a bearish slash bullish fair value gap formed in the move after the liquidity swept. Yes, that's what we're looking for. And then wait for price to come back to the fair value gap. Doesn't matter if it's bullish or bearish. Mark out your OT, place your discount premium from the highs to lows. Enter your trade with the tight stop. Make sure you follow your daily bias. Follow the trend. Don't try to fight it. Yeah, unfortunately, if you fight the trend, you're gonna get fucked in the ass. Remember to never trade on red folder days or FOMC days. Never trade chop nor shit price action when nothing is moving. Sessions. Yeah, so I have this marked out basically. I know it says 8 a.m. for New York because this is when it, I guess everyone hops on and just marks out their chart. London opens at 3 a.m. Tokyo 8 a.m. or 8 p.m. My bad. Sydney 5 p.m. New York 8 a.m. And these are some strategies to test out. I haven't tested out. I haven't back tested. But let's go ahead and hop in the charts to see you. So today was Wednesday, September 6th is the time of recording. We had ISM Services PMI. Now, this was at 10 a.m. So if we look on the charts right now and we did our whole, I like to jump in just a 1 hour. Actually, let's do daily buys, my bad. Let's actually give you a week perspective because we haven't done this in a while, and I know you guys are probably waiting for my prediction, which I have done a prediction. Unfortunately, my prediction was wrong. It actually went lower than I expected. We did have this daily fair value gap. I'll just show you on the daily. It's probably easier. So we have this daily fair value gap down here. Obviously, the fair value gap itself is like up here, like this. You gotta imagine it like something like this. That's what the fair value gap is right here. Then you have your what's it called? Encroachment or some shit like that in the middle, with these relative highs. My thought was that the price would come down either to this high or the CE down here and then move back up. Unfortunately, well, actually, not unfortunately, I mean, this is right. The analysis is right. It came down to this daily fair value gap. And then as you can see on the daily, it got bought up. So now on the daily, for example, tomorrow, my daily bias would be I would be bullish. And I've been bullish this whole month. This whole month I've been bullish. This whole past 2 weeks, 3 weeks, I've been bullish. I've been bullish. If you guys remember, I believe we made a video when it was around here. I told you guys it would sweep this liquidity, if not go, I think it was this one, if not go lower and come back up to these highs. We're in the halfway point, and think of it as it's a huge fair value gap. And right now we're in the middle of it. And this could either be like a bounce into this bearish fair value gap, which I'm not gonna lie, I think this is where we turn because we had a pretty big sell-off. But if we have a sell-off like this, and then the next 3 days, next 2 weeks, we get a nice push up, then I'm sorry to tell you, bro, but I'm bullish for the next month if this is what's gonna happen. So tomorrow I'm bullish. Obviously today I didn't trade because again, look at this. This is big news. This is red news. We don't want to trade on these days. So let me tell you why. So let's hop down to the 1 hour. We don't need this anymore. Obviously, what I like to do is mark out the zones. So I look right here on this blue line. Tuesday 5, we're obviously the 6. So I look when it changes. Wednesday 6, boom, right here. Boom, okay. So then what I would do is you'd mark out, where is it again? Right here. So from 12 a.m., this is the 12 a.m. open right here, this black line, but this is the highs of the pre-market session, if you will. So these are the highs. And then before 9:30, right before market opens, you're looking at the lows, the pre-market lows. Now there wasn't a lot, but this was our area before anything opened. Now, if you notice, this is a very shitty example because nothing got hit, right? If we theoretically, we would be bearish on this day. If you even look at the 4-hour, we are still bearish. We were targeting this fair value gap. We were targeting this CE. So by the time we're pre-market, we were bearish. Keep in mind, there was also news at 10. So we didn't know if that was going to be bullish or bearish. Anyways, hop back down to the 1-hour. Market opens at 9:30. Actually, probably not this low. I should probably take this low right here. Not bad. Okay, market opens at 9:30, right? Actually, it's this low. What am I doing? Fuck. Okay, this is the pre-market low, pre-market highs, right? What I would like to see, and this would be the strategy, would be price makes this high, and then price, comes down, whatever, makes this low, and then it like comes back up to this high. Market opens, sweeps this high, and then we be bearish. So boom, we create a fair value gap. We do market structure shift. We come back to this fair value gap, and then we dump. That's what I would have been looking for. Now, unfortunately, what we have here is we have high, low, buy side, sell side. The thing is, at 9:30, obviously we dump, and here, right? Obviously here, we'd be like, oh my god, we just hit sell side. Our thoughts now is that this this price action right here is going to jump up to get this buy side, right? And on the way there, it's going to be like, boom, fair value gap, come back down, boom. That's where like, oh my god, it's going to do that. Problem is, there's news at 10, and as you can see, 10 p.m. is we dumped at 10 a.m. So obviously, if market opens at 9:30, there's some big ass fucking news at 10. No one's gonna place a trade, even if you have a good strategy. It's not gonna take any liquidity if a lot of orders are trying to get filled before this big news event. So today was not the best day to show this example. Obviously, we dumped. I didn't take a trade because any price action after a trade is always choppy. It's always kind of, I don't really like it. There's not much to go with. It just creates a big fair value gap that price wants to come back to and then dump more. And then, there's not much to work with. So I haven't backtested this yet, the strategy. But let's try on a day, on another day that's not choppy as fuck. I remember Tuesday. Oh fuck, I gotta do this, don't I? Is it Tuesday? No, it's today. Tuesday we had nothing. Okay, yeah, so this was it. So this week was this week was fucked because Monday we have bank holidays. So nothing really traded on Monday. Then any type of price action after a holiday is gonna be shit. No matter if there's news or not for Tuesday, there was no news for Tuesday. So when you look at Tuesday's price action, where is it? The 5th. Where is it? This whole like from this, like this was the price action for Tuesday. Like this is shit. It just goes back, like you can see, it stays in this range. Let me actually refine this range. It just stays in this fucking range. It doesn't come out, it's just, this is the range it traded in. Like, how are you going to do anything with that? Like, yeah, you can go calls, puts. Like, that's not, there's no trend, there's no dump, you're not bullish. Like, this is choppiness right here. And this is after, obviously, Monday again, this is fucking shit. So let's take another day. Whoa. Let's take another day, for example, I don't know, today, whatever, let's take this day, for example, Monday 21. So let's go to Monday 21 with the open. Okay, so Monday 21, 12 a.m., we make a low. Oops. We make a low. Okay, why is this not working? Thank you. We make a low. and then we have to make a high. So yeah, we open here, boom, low, and then before pre-market, 8 a.m. Before 8 a.m. do we make a high? So this is our high. Okay. So with that being said, look at this. And this is, I guess, is a pretty example. It works pretty well. Again, this is on the 1 hour. So I mark out everything on the 1 hour. You can do it. Oh, fuck. You can do it on the 4 hour, but the 4 hour is a little more. It only has like 3 candles. I like to, I prefer the 1 hour. So boom. The 21st, we open at 12 a.m. 12 a.m. Boom, boom, boom. Let me actually look at this. Oh, fuck. Sessions real quick. Give me a second. London open 3 a.m. So 3 a.m. is London open here. So we have London open right here. Tokyo is 8 p.m. We don't have any p.m. at all, so it's like up here. So that's it, because everything is after. So you have London open. Let's just mark this real quick. Just so we know, why is it in the, why is it over there? Okay, let's just make it pretty. Yeah. Okay. So I would mark this boom as sell side liquidity right off the bat, and I would mark this as buy side liquidity right off the bat. Okay. Now, when this high is created up here, right, as you can see, let's go down to the 30 fucking minute. Fuck. I'm gonna have to find this shit again. Right here. I hate backtesting like this. It fucking sucks, but we have to do it. We come up buy side, okay. Let's remember what we said. Mark out both sides. We have sell side London open. We have buy side liquidity. We come here, okay, 9:30. Let's just mark it out like this. Boom. 9:30. Orders get filled. Orders are in. Market pumps. Boom. I don't know what our daily bias was at that time. I really don't know. I don't really care now. I just want the analysis of this backtest. Market opens. Boom. Okay. Fucking A. We have this buy side. We have these highs, relative highs that we marked in the pre-market. What is it going to do? Boom. It looks like at 10, I don't know if there was news on that day. I don't know. I could check, but I'm going to say that there wasn't, just in case. It sweeps this buy side. Okay, so now this buy side is taken out. Okay, so just mark it buy side fucking taken out. Okay, you have buy side taken out. So this buy side is taken out now. Where does it look to go now? Okay, your analysis could be, oh, well, it actually created a bullish fair value gap here. And that's what he wants to, take out now, because it's going to come down fair value gap, hit the CE, and then come back up even more bullish. Right. But guess what? You can't go higher until you go lower. You can't go lower until you go higher. So although this fair value gap is correct, it was correct for this move only, right? As this pre-market gap, or this pre-market price gap, created this fair value gap, which allowed price at 9:30 to bounce off this gap, to make this bullish candle, to take out this buy side, to then disrespect this bullish fair value gap, which was already ran through, to target the London open sell side and the New York sell side, not only once, twice, boom. And then what do? Now this is where you can go into the 5 minute, 1 minute, but if I switch time frames, obviously it gets fucked. You can go into the 5 minute. I like the 5 minute to trade. I like the 1 minute to really plan out where I take my trade. You can go in there, refine where you actually want to get in. Obviously, if you enter here, like at any point here for calls or whatever, fuck this, right? At any point, would you want to target these relative lows down here, right? Obviously, relative lows, probably this or this. Let's say these lows over here. Obviously, your target would be your first target would be these highs because we've already taken them. So you know that, okay, this is either going to get ran through anyways. And yeah, I mean, if this was the case, right, which it is right now, and then you can have runners, whatever, and you can have your analysis on where the price actually wants to go, what it wants to do, blah, 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 right? I have to backtest this a fuck ton of times. Again, let's just say, because this is not actually how I enter, right? I did say I would enter off a market structure shift, then a fair value gap, and a retracement back to that fair value gap. Right here, we didn't get any retracement back to the fair value gap. What I would like to see is a market structure shift, right? Sell side was taken down here. The market structure shift would be up here, or no, it's these highs. Market structure shift. Oh, I don't even have one. Oh, I do. What's this? It's kind of fucked. Close above, market structure shift. What I would like to see now is this fair value gap being created. And what I would like to see to take my trade personally would be this price to come back down to here to see some bullish action and to get bought up. And that is exactly where I would place my trade to get in for obviously the highs and then target the lows or whatever, right? For, you could even make it sell side, almost a 3-to-1 risk to reward. But did that happen? I don't know. Maybe it did happen on the 5-minute, but yeah, fuck me. Again, this is just for me. This is not for you guys. So you guys can listen, but I'm just making this for me. This is for me to come back to realize what I was doing wrong and how bad my holy fuck, I'm dyslexic. Oh my god, bro, lock in. How bad my oh my god, I'm gonna kill myself. How bad my analysis was. I mean, yeah, I mean, market structure shift, yeah, creates a fair value gap, comes back down into this, I guess taps it. I mean, you could really just enter off this. Like if you see really bullish action, like already you're seeing bullish action, already you're seeing a market structure shift. The moment you see this, you know damn well if this comes back to, oh fuck, wait, look on the 5-minute. Look, I was right. No, this works. My bad. I was looking at the 30-minute. That's why I was confused. So yeah, yes, you have the 30-minute. Whoops. You have this 30-minute. Fuck. Oh my god, fair value gap. Okay. 30-minute fair value gap. But inside the 5-minute, right, where you're going to be entering, you also have this 5-minute fair value gap, which is created like right away, right here. Let's make this like gray or some shit. Let's also get rid of these lines because I don't want this. You have this 5-minute fair value gap, which is created off this move, and then price comes into it, taps into this fair value gap, creates this fair value gap, market structure shift, hits these highs, whatever, goes into the fair value gap. I'm guessing OTE. Oh my god, my sister just got fucking home. OTE hits 0.5, you're into off 5, you're good to go, buddy. You get your money. Boom. Okay, good analysis. That was a good one. I messed up a little bit, but this, we're all doing the learning curve. So, where was this shit? Right here. Okay, that was good. Let's do another one, right? Because you guys are here for it. Again, I'm gonna pick a random fucking day because I hate doing days that I don't want to be a fake ass dude. Like if I know a mistake, like if I'm doing it and I'm like, oh fuck, there's a mistake here or some shit. There you go. Like I'm gonna point it out. Let's take this day for example, which is Sunday 13. Okay, so there's Sun 13. Okay, so it's this. Okay, so Sunday 13. I don't know if there was news, but look at these fucking candles. Look at these wicks. Fucking horrible. We hate this. Sunday 13. Oh, it's a Sunday. We can't do a Sunday. That's I was gonna say this price action looks fucked. All right, let's do what is this? Monday. Let's do Monday. Fuck it. Let's do Monday because this looks bad. Monday 10 p.m. Okay, so Monday 14. Monday 14. Monday 14 10 p.m. Okay, Monday 14. It looks like you open right here. So Monday 14, you open right here at 12 a.m. Are these this low? No. This is actually a lower low. So this is Monday 14th. Can you just be a normal fucking line for one? Like, Jesus. So low, and then Monday 14th goes up, goes up, goes up. 4 p.m. Wait. Wait, 9 a.m. Wait, what am I doing? Never mind. Brother, I'm so high right now. um Actually, these would be your lows down here. Okay. Pre-market lows. Then it goes up. London session is 3 a.m. as you remember. So boom, boom, boom. 3 a.m. London lows or whatever, right? London. And then you go for the highs. So pre-market 3 a.m. highs. These obviously 10 a.m. That's when market has opened already. These would be our highs up here. You can even go ahead and mark these down here because I do like to get the order blocks. Okay, so now we have a clear structure. Is it clear? No, not really. Is it gonna make sense? Probably not. The way I explain it, it doesn't make sense half the time to me. So I don't know how it makes sense to you. And there's no fucking water. So we open 12 a.m. Okay, we have this London session open too. Again, sell side, sell side. I don't know what our daily bias was. I don't know. I can't tell you. I don't know if we had news. We come up, we create these highs, probably off these old highs, liquidity, whatever. Everything's based off liquidity and interest rate. You know what I mean? Sweeps liquidity, gets to an order block. There probably was an order block, gets down, sweeps, whatever, comes back down. So we do these highs, buy side, sell side. We open, where do we open? Here. This is the open. At before open, right? Pre-market hits this previous liquidity up here, order blocks, comes down. Obviously, you can't go higher without going lower, so it targets sell side. The first sell side it's going to target is the London Open, which is at 3 a.m., but that's not really what it wants, does it? It really wants this low. That's really what it wants, these lows down here. So what is it going to do? Pre-market, boom, comes down. Market opens. Orders get filled. What happens when order gets filled? Obviously, it gets bullish. Not only because people are buying into the market, but because sell side was just taken. Obviously, for sell side to be taken, what needs to happen? What needs to happen is we need to have buy side taken too. What am I saying, bro? Yeah, we take sell side and we just pump. There's no reversal. Again, this is on the 1 hour. If I go to the 5 minute, bro, but I have to go back all the way, bro. Oh my god, that's so fucking petty. I don't even know where this shit is. I'm not gonna lie. There it is. That's really annoying. I'm not gonna lie. Okay, 5 minute. Take this sell side. Yes. Check. Whatever you want to say. We take this sell side. We're actually there for quite a while. 9:30 open. Boom. It opens. We actually take it at 9:45. Then I guess on the 1 minute we get a bullish move. Boom, boom, boom. And this is the problem. I can't enter off this, right? If you look, we're now looking for a market structure shift. So what I'm looking at these highs right here. So this right here, this candle right here, this whole candle, that's our market structure shift because it closed above. Not these wicks, not this one, this candle right here. This is our market structure shift up here, right? After this market structure shift is created, what we're looking for is a fair value gap. Problem is on the 5-minute, bro, there ain't shit, right? Because I'm looking after this body closure, this comes down back into it. There probably was, there's a small, I don't know if you could see that, but there's a fair value gap right there. That's a fair value gap. This little tiny fucking line, that's a fair value gap. Did price tap into it? I don't know. I don't want to go on the 1 minute, but probably. You could probably enter off there. Now, if you were to enter this trade and you had a daily bias and you knew what was going to go happen, and you had a tight stop loss, whatever, you would target, let's just pretend that you entered off, I don't know, here, for example, got in a little late. Target highs that we've already swept. Your stop loss would be these lows. Okay. And then again, you can let this sit. This would be your first take profit. And then you can have runners all the way to, we're still the 14th. It's 4 p.m. So you're basically up here. Good trade. Good trade. You know what I mean? Good trade. Now, again, just looking at this, and I hope you guys understand, this to me looks so wrong. And I'll tell you why. From anyone that has learned ICT or is doing SMC, this right here looks wrong. You're not entering off anything except this tiny fair value gap after this market structure shift. You don't have confirmation that this is a valid market structure shift until there is a fair value gap that is created, until price comes back into that price range to go lower to then go higher. Because at the moment, you're going down, baby. You're going down and you're entering a position where right here on the opposite side, there was I could probably tell you, there's probably a fair value gap right here sitting, you know, like just fucking right here. And you're entering right off this fair value gap, right under it. That gives me a heart attack. At any point could there be a market structure shift or break of structure. But if you look at these candles, bro, like market structure shift, sure, no market structure shift. No market structure shift. Over here, market opens, no market structure shift. It takes sell side. The only time you're getting one is after this candle that hits this fair value gap. Then guess what? You could have a fucking bearish candle and just take out this fucking level and just fuck you in the ass, right? It could have happened. That's why I'm always waiting for confirmation. Would I have taken this trade? Probably not. Would it have been a nice trade? 100%. Oh yeah, 100%. You know, it got to these highs, it swept these highs, and then, you know, came back down to these highs. It respected these highs, even went higher. I would have never taken this trade. Okay. So tomorrow, let's look at the news. Let's prepare for tomorrow. Tomorrow is Thursday. Unfortunately, I don't think I will be okay already. 8:30 a.m. Now, okay, here's the thing. I'll tell you this right. One thing about news is that if there's a red folder, be careful. But if there's a red folder in pre-market, that sets the price action for the day to be good. Now, I don't mean this in a bad way, but if it's in the pre-market, it doesn't affect your orders. You can't trade during pre-market, right? You can have a position that's going to fuck you over, but you never hold options contract during over a period of time unless you're fucking Warren Buffett, right? So looking at tomorrow, let's go on the daily. Let's just make sure we're correct. Again, my bias, guys, is that we are bullish. Yeah, this week, obviously, the problem with this, okay, I love having thoughts. This week, from Monday to Wednesday, we were bearish. As you can see, boom, Tuesday or Monday, we open. looks like a doji. Obviously, Friday was a doji. The weekend doji because we had this sell side taken. We had the C taken from this huge fair value gap. Um, doji waiting for reversal. Okay, then we know Monday bank holiday, nothing happens, so it's like the same doji. There's no big moves, but then you know that okay, there's a doji in place for Friday and Monday. It just hit sell side. It wants to go down, but where? Okay, fair value gap. Okay, cool. Where's the sell side that it wants to take? Boom, mark it out. Where's the order blocks it wants to fill? Mark it out, right? Now, Monday, bank holiday, no trading, barely any trading. Tuesday, it wants to dump. It does dump. Wednesday, it has the opportunity to dump because of ISM, right? It was positive, which made the price be negative, which means it's gonna go bad. You know what I mean? It's all lined up. Tomorrow, if the unemployment claims, have a negative impact on the market, we're gonna be going up. So if tomorrow this forecast or if the actual forecast is higher, right? What does it say? Actual less than forecast is good for currency. Okay, my bad. If we are more, if this is more, then we'll go up. Obviously, if you just look at this, if any trader is looking at this, you can see that the candle is getting eaten up. Does this mean that we're going to keep going up? No. Does this mean we're going to keep going down? No. This doesn't mean anything. It just means that at the end of the day, buyers were stepping in to put it back to where it belongs, price where it needs to be rested, right? What I'm looking at right now is the sellers got all the way down to this fair value gap. They got their buy-ins. They got their orders placed. They took out everybody, and now they're going back up. The question is, back up to where? Where the fuck are we going? Well, no, there's no question. This level right here got taken out. So we are obviously now targeting this level. Or it got, my bad, not taken out. Shut the fuck up. It didn't get taken out. It just got, it got tapped in. So we want a body closure above this, and we're playing in fire. This whole zone from 4572.5 to 4542 is quite a fire zone, and we're in this zone. I'm not trading at all whatsoever. I don't want to lose any trades there. But the way up, right? I'm actually so confident in my prediction that I just gotta find the fucking my prediction would be this. It just goes up all the way to this motherfucker. If not, touches it, whatever, comes down, whatever, fair value gap, comes up like this. What the fuck? What the hell? Is that what's going to happen? Absolutely not. I'm going to be wrong. But at least I made my prediction. I have my bias for tomorrow. Will I be able to trade tomorrow? I don't know. We'll see. Am I going to have my bias right? Probably not. I don't know. I'm just learning, to be honest. Yeah, that's it.